Tan v. Del Rosario Jr., GR numbers 109289 and 109446, October 3, 1994. Summary: 2 special civil actions for prohibition were filed before the Supreme Court. First one, GR 109289, assailed the constitutionality of Republic Act No. 7496, also known as Simplified Net Income Taxation Scheme or SNIT, saying that it violates Article 6, Section 26(1), Article 6, Section 28(1), and Article 3, Section 1 of the Constitution. Second one, GR 109446, contended that the respondents have exceeded their rule-making authority in promulgating Section 6, Revenue Regulations No. 293, applying SNIT to General Professional Partnerships or GPP, to carry out RA 7496. Supreme Court dismissed both petitions. The first failed to show that the amendatory law violates the said constitutional provisions. The second, for wrongly construing that the Section 6, Revenue Regulations No. 293 as imposing an income tax liability on GPP. Opponent D. Justice V. Toog. Facts. Petitioner's argument in GR number 109289. 1. The title of House Bill No. 34314, progenitor of Republic Act No. 7496, is a misnomer or, at least, deficient for being merely entitled, quote, Simplified Net Income Taxation Scheme for the Self-Employed and Professionals Engaged in the Practice of Their Profession, end quote, when in reality the law changes the taxation scheme from net income to a gross income taxation scheme. Hence, it violates Article 6, Section 26(1) of the Constitution. 2. RA 7496 desecrates the constitutional requirement that taxation shall be uniform and equitable, in that the law would now attempt to tax single proprietorships and professionals differently from the manner it imposes the tax on corporations and partnerships. Hence, it violates Article 6, Section 28(1) of the Constitution. 3. Given the above, the tax measures now imposed amount to unjust confiscation of property, which is violative of the Equal Protection Clause. Petitioner's argument in GR number 109446. Respondents have exceeded their rule-making authority in promulgating Section 6, Revenue Regulations No. 293, which applied SNIT to GPPs. The law is intended by the lawmakers to apply only to individuals and professionals, not to business corporations and partnerships. The questioned regulation reads: Section 6. General Professional Partnership. The General Professional Partnership, GPP, and the partners comprising the GPP are covered by RA number 7496. Thus, in determining the net profit of the partnership, only the direct costs mentioned in said law are to be deducted from partnership income. Also, the expenses paid or incurred by partners in their individual capacities in the practice of their profession, which are not reimbursed or paid by the partnership but are not considered as direct cost, are not deductible from his gross income. Issue 1 of 2. Whether or not RA 7496 is constitutional. Held, yes, RA 7496 is constitutional. A. The full text of the title actually reads: An Act adopting the Simplified Net Income Taxation Scheme for the Self-Employed and Professionals Engaged in the Practice of Their Profession, amending Sections 21 and 29 of the National Internal Revenue Code, as amended. Allowance for deductible items was reduced, but the law still adopts the net income, not the gross income, taxation scheme. B. Single proprietorships and professionals are taxed differently from corporations and partnerships. Such a system of income taxation has long been the prevailing rule even prior to Republic Act No. 7496. Uniformity of taxation, like the kindred concept of equal protection, merely requires that all subjects or objects of taxation, similarly situated, are to be treated alike both in privileges and liabilities. C. Tax measure not unconscionable and unjust as to amount to confiscation of property. No clear contravention of inherent or constitutional limitations in the exercise of the tax power was shown. Issue 2 of 2. Whether or not respondents have exceeded their rule-making authority in promulgating Section 6, Revenue Regulations No. 293. Held, no. Section 6 of Revenue Regulation No. 293 did not alter, but merely confirmed, the standing rule that the partners themselves, not the GPP, are liable for the payment of income tax in their individual capacity computed on their respective and distributive shares of profits. Section 6 tackles the extent of allowable deductions applicable to all individual income taxpayers on their non-compensation income. There is no evident intention of the law, either before or after the amendatory legislation, to place in an unequal footing or in significant variance the income tax treatment of professionals who practice their respective professions individually and of those who do it through a general professional partnership. Note: the Code classifies taxpayers into four main groups, namely, 1. Individuals, 2. Corporations, 3. Estates under judicial settlement and 4. Irrevocable trusts, irrevocable both as to corpus and as to income. Partnerships are either taxable partnerships or exempt partnerships. Ordinarily, partnerships, no matter how created or organized, are subject to income tax, and thus alluded to as taxable partnerships, which, for purposes of the above categorization, are by law assimilated to be within the context of, and so legally contemplated as, corporations. SNIT is not intended or envisioned to cover corporations and partnerships which are independently subject to the payment of income tax. Exempt partnerships, upon the other hand, are not similarly identified as corporations nor even considered as independent taxable entities for income tax purposes. A general professional partnership is such an example. Here, the partners themselves, not the partnership, although it is still obligated to file an income tax return, mainly for administration and data, are liable for the payment of income tax in their individual capacity computed on their respective and distributive shares of profits.